Okay. Hi, everyone. Thank you for bearing with us while we got through the technology pieces. I can see a few people have gone to lunch already, so we will try and entertain you and then get you swiftly onto lunch as well. So thank you very much for having us here today. As James kindly introduced, it's Bianca Wallace. I'm the US Chief Risk Officer for Norinchukin Bank. For those who don't know us, we're effectively, due to an act of parliament in Japan, the central bank of agriculture, fisheries and forestries in Japan, and we're a very large US investor. So kind of looking at things from both ends of the scales here in New York. And then let me hand over to my esteemed panelists who are welcome, and a big welcome to you both here today. Gladys, if you could kindly introduce yourself.
Thank you very much. Gladys Griffiths. I work for State Street Trust Bank. I am in the third line, so I'm the head of internal audit for global markets, the lending book, finance, treasury, risk, and technology. I was the interim head for the last 9 months.
Thank you. And over to Chris.
Hi, I'm Chris Berk. I'm with Telesign. For those of you that don't know Telesign, I always joke we're probably the most well-known unknown company out there because chances are there's probably 15 apps in your phone that are using us today. Telesign started as a pioneer of OTP, the one-time SMS passcode, and today has grown into the fourth largest CPaaS provider, providing digital identity and global communications to some of the world's largest marketplaces, institutions, and really anybody that does business online. Today we support 5 of the top 10 global banks headquartered in the US and have 6 tier 1 financial institutions that leverage our data. I manage our enterprise sales team and excited to talk to you all today.
Great, thank you guys. So today we're going to talk about developing a robust and agile risk management framework. So with a panel like this, we have a very unique perspective. So Gladys will be outward-looking from the institutional perspective, and then Chris can kind of give his inward-looking view. So it'll be a nice, well-rounded view on this approach. So the topic itself is an interesting one, right? Like robust and agile, they're almost opposite. So for something to be strong and robust, you almost want it to stay static and like a wall and a front and a strong, impenetrable force, whereas agile is kind of moving with the times and keeping up and changing with the environment. So it's two kind of very difficult objectives for an organization to have. But two very important characteristics of any risk framework. So with the data and tools that we're seeing kind of in our environment, things are getting, our environment's getting faster and faster, there's more and more data, the need to respond is just getting greater and faster. So whether we're answering to customers faster, to our supervisors faster, to our supply chain faster, the world is getting faster and faster. So being robust and agile are key important features in this environment. So with that, I'll go to Gladys for my first question. It's been a really busy 18 months, and as we've seen a lot of change in our environment, a lot of change of focus. I think with Silicon Valley Bank and some of the regional banks having liquidity issues 18 months ago, it was really March last year when they came to the forefront, and then we're seeing other incidents, more on the cyber front. Sabina, the panelist earlier, talked about the ICBC issue. With that, Gladys, let's have a think about what are the risks that financial institutions are highlighting are most prominent as we reflect on the last 12 to 18 months.
Okay. Thank you very much, Bianca. So I think if we think about the risk management framework generally and the risk management stripes, right, because there's obviously, they span across both financial and non-financial risks. From the financial risk side, exactly like you talked about, I think there's been a very heavy emphasis around liquidity and credit. And if you think about agile versus robust and the walls, I would say on the financial side, because of the facts, I think some of those risk management frameworks tend to be much more mature and steady. You're really looking for that robust framework wall that ensures that you have the right limit structures, et cetera, in place. On the non-financial risk side, I think there's been a lot of focus on cyber, data privacy, as well as AI. Like AI is a big topic at this point in time. And there, I almost feel like you're looking more at an agile framework, because those things are moving and changing at such a rapid pace that if you develop something that is very structured, you can actually pivot as the things are evolving and changing. So I think there's like two sides, but I would say those are what I've seen from, like I said, inward, outward looking, are the things that we are focusing on, and that we have a much bigger emphasis when we're looking at the risk management areas.
Excellent. Thank you, Gladys. So disruptions are becoming business as usual. So those 1 in 100 year events are actually happening, particularly with weather events are happening more and more frequency. So it's prudent to really be prepared for these disruptions. So Chris, what proactive steps can be taken now to prepare for future market or business interruptions, disasters?
Yeah. So what I think is happening, at least with the financial institutions that we're talking to, is providing a lot of awareness and focus on different infrastructure dependencies that they have. When you look at market disruptions, well, you look at technology adoption, I think a lot of institutions have adopted a multi-factor strategy. So some sort of way to have a second factor of authentication in critical workflows. In turn, what's happening is these financial institutions have some infrastructure dependencies on, the mechanisms that deliver those SMS one-time passcodes or push notifications, right? It's a positive to have a second factor, but when technology goes down, I mean, most recently in the past 6 months, we've seen issues like CrowdStrike or AT&T going down, right? Stopping global airports, stopping people from transacting, doing business. And it's really, from my opinion, a product of a security control in place that has an infrastructure dependency on a third party, right? So what we see a lot of our financial institutions, specifically when it comes to critical messaging and critical authorization, is looking at OTP as a layered orchestration approach. So removing that, what we've seen, I don't know if anybody has AT&T and was affected by that outage 6 or 8 months ago. I see a lot of heads nodding. Banks had two decisions, right? They either don't let, and this happened, oh, by the way, at market open, which is the best time for something to go down, right? They had two decisions. They could either, just segment the AT&T customers to ride the wave and say, hey, we'll get back to you when we get back to you, or they turn off the risk controls, right? If you turn off the risk controls, bad actors right away are gonna say, hey, look, I know that XYZ bank has, taken down their second factor authentication or any multi-factor that they put in place, and now you open up, because you want to have ease of use, you open up some areas where fraud could occur. So what we're seeing is, and that's not just for OTP, I mean, you look at third-party infrastructure dependencies, especially now in such a tech-driven world, and how do you mitigate that risk? With multi-factor orchestration, we see adoption of new technologies. Some very large early adopters are moving to silent network authentication, push notifications, and waterfalling experiences so that you're really mitigating that risk by having an orchestration flow. So if something goes down, you have plan B, plan C, plan D, and plan F. And right now, I don't think a lot of banks have really thought, oh, it's great, right? You have this second factor. It does stop 85% of social engineering fraud if that OTP can't be compromised. But you don't think about it. The second side is, oh no, what happens if there's an outage or an issue, right? And I see that across the board, just with technology and looking at how to really evaluate dependencies on third-party infrastructure that are not going to leave you high and dry when something happens.
Can I take that a little bit? So please. When you're looking at how do you want to mitigate sort of emerging risks, I always say in order to look forward, you kind of look backwards, right? Because we all have to learn from what happened historically. And being an internal audit, we do tend to look backwards a little, right? Because we're taking samples from previously and trying to understand if something went wrong here, what are some of the controls, some of the mitigations you should put in place? And a lot of that is around like what Chris talked about, around like layering, right? So you have one control, if you can get past that, well, what does that actually mean? You look at the second thing. So, you know, we went back way back when to, let's say, sad event, 9/11, right? People couldn't get access to their buildings. So when you were thinking about continuity planning, in the future state, everyone made sure that their continuity was outside of their location, further away, et cetera, 24-hour trading in other locations. And then suddenly, when COVID came, it's like, shoot, not only does it have to be off-site, you can't be together, right? Because like that was the first thing that happened. Everyone put people into their same off-site locations, and then they all got sick because they were all in a much more contained room. Now they think about something else. So really, it's like, you know, people tend to want to like, you know, when you're trying to look forward, people are like, well, why do you keep looking backwards? Because you actually have to learn and think about what happened historically so that you can build on some of those controls and pivot, right? So I think those are some of the things that you think about when you're trying to build your future state risk management framework. What are some of the things that people have done and broken through? Again, looking at things like SVB, looking at CrowdStrike, looking at all, it's like, what do we now need to do more going forward? So I think that's one of the big things. Learning about what we did historically and where we made mistakes so that we don't make the same mistake again. Excellent.
Thank you, Gladys. So, can't read my own handwriting. So that's really touched on our next point. So what new best practices are there? So over time we evolve and we get better. We look at the disruptions and how others have dealt with it and really kind of then work out which pieces of those best practices are best for our organisation. So I'll put this question to either of you. What new best practices should be followed to integrate risk management into the daily organisations?
Well, a lot of it, I think, a lot of it stems, the actual process that you go through, I think, still stems from the historic. Like I said, process mapping, making sure you understand where all your control points are, where your gaps and where your vulnerabilities are, right? Because until you actually know all those, you can't protect what you don't understand is actually there, right? So I think that's the forefront of things. I think, though, the way which, once you figure out what those gaps are and where your vulnerabilities are, how do you actually mitigate them going forward has changed a little bit. While we're looking at a lot of things around AI, machine learning, more innovation, more automation, because one of the things that you're finding as we're getting more sophisticated, the threat owners, threat people, whatever we call them, are also getting more sophisticated, right? Threat actors, that's the word I was looking for. I was like, why can't I remember the word? Threat actors are getting more sophisticated. You need to kind of get ahead of them. And how do you get ahead of them? You have to have more access to the data yourself so that then you can figure out where they would come in, et cetera. So I think it's becoming much more difficult because, and that's where the Agile aspect comes in, you have to be able to pivot, understand what's coming in new, what are those new technologies, what are the new things that the threat actors are able to do. And I think the problem with the threat actors themselves, or the problem for us with the threat actors themselves is they don't care if they fail. They're just gonna keep going over and over. It's like, oops, I missed, I didn't get in this time. I'm just gonna keep trying. So they have no, I mean, there's no downside for them, right? They're just gonna keep going until they actually get in. So trying to think like them, using old methodologies but new technologies to actually protect.
Yeah, and going back to your earlier point as well on the financial risks as well, is just reassessing your financial risks in terms of your models and assumptions is equally important as well. So, for example, I think Silicon Valley Bank and the regional banks saw deposits leave the banks faster than we've ever seen before, and that was driven by technology and the capabilities to transfer money much faster now than we've ever seen. And so that's really changed from the fundamental modelling around deposits and knowing who your customers are, how they operate, how they act, how fast they can move things. And so I remember, 20 years ago when we were modelling deposits, they were really sticky and the balance levels changed not very much at all, whereas now that can change quite quickly. So they're kind of some of the assumptions both on the non-financial and financial side that it's important to continuously reassess. Are there any best practices that you've seen, Chris, that you'd like to add?
Yeah, I love the, old philosophy, new technology. I mean, I think, that's such a great point because I think AI and things allow, data has always been there, access to data, but how quickly can you react with new technology, and then react again, right? And then react again, and then again, and then again. But I do think that it is embracing these type of technologies, testing out to see, okay, does this fit into our methodology, and can we get more uplift, more detection by utilizing a more agile, more AI-driven approach, rather than just strictly, black and white decisions. I think we're seeing a lot more uplift, even on, on the bad actors, but even then using that data to delight the good customers, and then having that experience cascaded where you're using AI in such a way where you're balancing fraud, friction, and experience. And I think that's very difficult to do. Like most of us get stuck in workflows that are not great. But if you've ever been fully delighted by an experience, that's using those old philosophies with new technologies to be able to be agile enough to that specific consumer to be able to either let in or keep out.
And that's a really good point. Like, technology is not all bad and all threats and all weaknesses and gaps and things we need to address. There's absolutely the good, positive elements of it. The ability to model our businesses, our customers, our needs, our everything, our environments more comprehensively, faster with tools. So with that, Chris, how are ways that technology can play into streamlining risk management processes?
So I didn't tell them about this answer, but I do think it is similar. I think that banks are leveraging tech to make data-driven decisions. I think it's with or without AI. I think when you break it down into how do you leverage technology, you leverage it in two different areas, at least for the banks that we support. That's either looking at technology for ancillary applications and looking at it as well into your own digital ecosystem. So where we see a big uplift for using technology or data is really in the ancillary applications outside of the financial institution, right? So you have your digital banking platform, your online banking experience, and you control that. But consumers these days are posting videos online by the minute. I mean, I got out of Penn Station and I was probably in a few TikToks, walking around. But it takes only 2 minutes of an online voice to spoof your voice and to use it against you to commit fraud. Spoofing tools are out there. We see a lot of bad actors that are compromising subscriptions and services that you offer, right? So people share passwords amongst the similar accounts. My grandmother's Facebook has been hacked 7 times now and counting, right? But if they use that same information from those websites to access their online banking account, it becomes a very scary vector for financial institutions. We see a very large focus on leveraging technology to understand applications that are not your own. Whether it's compromising your telecommunications provider by seeing if you're, by trying to compromise your cell phone, whether you see them trying to go through a call center through the IVR using an AI spoof voice. These are all areas that a lot of our banks are focusing on. How can you control what you can't control, right? And I see that as a technology consortium data has allowed this to be actionable these days, right? I think there's a lot of consortium data in these different applications, social media websites, that's available to financial institutions. And then how can they action off of that to leverage that technology to then control what's inside their ecosystem? Second would be, to stop to use your existing application data. So I think every bank that I have talked to has multiple lines of business and data is always siloed, right? What happens in the left arm of the bank doesn't always happen on the right side of the bank. So what we also see is leveraging AI and machine learning to be able to understand all lines of business and action across the entire institution. I think if you look 10 years ago, right, you could look at a lending side of the business versus private wealth, and those two might not ever talk or understand the similar challenges. But I think today, breaking down those silos and see a lot of financial institutions centralizing services for that reason, so that they're able to then say, okay, we see this over here, let's action off it over here. We see these signals on this side. So it's, what I see as leveraging technology is focusing on those ancillary applications and then cross-sharing data internally, again, to make actionable decisions off of AI-infused data.
Thank you. I like that you refer to the bank as a left arm and a right arm. Sometimes it feels more like an octopus with many arms and many moving parts going at one time, but I'm very happy with just having 2 arms. That sounds great. The other point you brought up was data. We've got more data than we've ever had before, and the ability to use that data across the organisation as a whole is certainly something that not just in financial institutions, but more broadly, all organisations are challenged with, just managing that data and using it effectively. And it wouldn't be a RegTech conference without my next question. So what place is AI and ML, machine learning, have on risk management strategies? Gladys.
So we talked about data a little bit first. One of the big things between AI and ML and how that actually impacts the risk management is the fact that you're able to access that data more holistically, able to aggregate and search through voluminous amounts of data. So like I said, I sit in the third line, so from an internal audit standpoint, it's particularly important, and we've been spending a lot of time actually investing in that specifically because when we do our testing, we tend to pick samples, right? So if you have, and I'm going to use like financial information, trading data, whatever, we have thousands, tens of thousands of trades, but I'm going to pick 25 randomly and try to sample that. The probability of actually being able to identify any errors, risk, et cetera, associated with thousands is like really looking for a needle in a haystack when I'm only picking like 25 samples. So the use of AI, machine learning, data analytics, automation really has advanced some of that. So now we are able to, in some instances where the data is clean, so that's where the other problem resides, where the data is clean, we're able to actually do 100% sampling. So I'm able to look at the entire population over an extended period of time to be able to do a deeper investigation as to where some of the gaps and control concerns or weaknesses may be. The problem is data, as Chris said, has existed for a long time. And that data back then was not structured in the same way. So when we first created a database, it was for the purpose of X and Y, and you put information in, and then someone says, oh, I can also use it for like A, B, and C, and so then more information came in, and then so now this thing that was created for one purpose now houses data that might do like 17 different things. So when you're trying to query against that, it becomes much more difficult, and then people are manipulating some of that data because they're trying to fix it, and then you're putting it in a different place. And so I think all of that then manifests itself into quite messy data, and a lot of folks are spending a lot of time actually trying to make adjustments, et cetera, and clean that up. So as that effort goes on, some of machine learning and AI is being used to do that cleanup, but if we can get to a stage in, I don't know, the industry in general, where there is that series of clean data, you probably would be able to use AI and things of that nature to really get a lot of insights and to be able to protect ourselves more broadly.
Thank you, Gladys. Thank you, Gladys. And Chris, how are you seeing AI and machine learning used in the industry?
Yeah. So a little different perspective, more on the front end fraud of things, but I think that humans are still kind of the biggest fraud vector that there is. I think AI on a negative side has really made fraud scalable, very scalable, 24/7, 365, scriptable. And I think now text, phone calls, and AI-built attacks are personalized at scale. I think email is dying because of email fraud, and compromising email is dying because of AI. And we see personalization. I mean, you see it today here in the U.S. with the elections. Who has got an election email? But we've all probably got 4 text messages this morning. It's the easiest way to get a hold of you, and AI is allowing that scripting and that personalization at scale, making it a very big challenge for financial institutions. I think the positive side, so that's the negative side of AI, right? More fraud at scale, real quick. And if it works, mass produce it. I think on the better side is fighting AI with fighting AI with AI, looking at predictable AI and anomaly detection, which is far superior than some of these attacks to be able to leverage appropriately with that dual factor authentication strategy. I think when you leverage AI with a multi-factor strategy, you're reducing the downside of AI by about 85%. And I think it's having initially a negative effect on banks. And then you start saying, okay, how do we then leverage AI to fight AI? And then third, I think where Gladys is picking up on is also using it to make better data-driven decisions, using it to be able to look at a full scale of a picture rather than just a few pixels. And then lastly, I said it before, and focus on the positive too. That's what my mom always told me. Don't always think about the negative, think about the positive. But use AI to delight those customers, right, in the right experience. There's so many technologies out there, from pre-filling to predictive analysis, that allows the consumer side of things to mitigate that risk, but also delight them at the same time.
Thank you, Chris. The email phishing is an interesting one. I'm pretty sure we've all been at organisations and they've been training the community, the staff members continuously for many years now on the phishing examples of, be careful of, make sure you verify your email and where it comes from. But AI, you're exactly right, AI is making it much more sophisticated, and it doesn't seem to be how much we train our staff members. There still seems to be, if you look through the FBI, kind of releases that they do of all the incidents that are out there, those phishing emails are still prevalent, and telling your employees to look for the spelling mistakes or to check the email address, it's just getting better and better with AI. So certainly something to be aware of. So we've got a few audience questions here. I think I'll put the first one to you, Gladys. So what are some of the biggest challenges to developing a robust risk management framework?
I think one of the biggest challenges, unfortunately, may be actually people and culture, right? Because one of the things we talk about, good and bad, a lot of the technology, a lot of things, everything that's coming in makes everybody's lives easier. To some degree, risk management and risk management frameworks, by the nature of the purpose, is to make things more difficult. Right? It's like, how do we protect things, right? And so people are innately then like, I don't want to do that because now it's going to take 3 levels of approval or 3 whatever, for me to do that. Like multi-factor, fantastic. But it's like, oh my God, now I have to log in twice. And it's hard enough to remember one password. Now you want me to say a second one. And now I have to go onto my cell phone and pick up the special code. And when you change your cell phone, you have to transfer that application. And to be honest with you, I currently carry 2 cell phones because I haven't transferred my little RSA token thing to my other phone. So now I carry 2 cell phones, right? It's like the hardest thing is getting people with the lens and the mindset to understand and embrace the fact that despite the fact that it's probably going to be more painful, it is far less painful than if a threat actor actually was able to get in. Right? And so, we're talking about some of that, multi-factor, and it's like I recently got hacked into my Marriott account. Someone actually booked a reservation under my name using my Marriott account and stayed there, and somehow, and it's like I called the hotel and they actually confirmed that I stayed there, and I'm like, I did not stay there. But that's exactly it, because I never check, right? I haven't stayed there in a while. I never check. I obviously would not put a multi-factor against my Marriott or my other things. So we are our own sort of enemies when it comes to some of these things, because in order to protect ourselves, it needs to make our lives more difficult, and none of us want to make our lives more difficult. So I think culturally, personally, people are probably the biggest challenge to actually building a robust risk management framework.
Are there any questions in the audience before we've got a few on the chat here.
Yeah, so it seems like a lot of the thank you. So it seems like a lot of the tech applications are focused on the front line, but have you seen use cases in the second line Gladys, you mentioned process mapping, which I think would be a perfect place for it, but have you actually seen it come to fruition?
From a the process mapping that we do still tends to be using some of the more old school, call it, tools. A lot of it's still done using Excel, Visio, other type of, mapping tools. So there hasn't really, at least I haven't used anything particularly sophisticated in that perspective. But from a second line more broadly, I think there are much more sophisticated things, particularly in the model space, right? So they're starting to develop a lot of things using different, like Python, other AI sort of development tools. And then also there's a lot of different visualization tools, because I think the big one back in the day, I guess it's still used, I'm like talking like I'm like a freaking fossil, but it was Tableau, right? So now I think there's like Power BI, and there's a few new technologies for us to be able to utilize that data, visualize the data, and be able to make decisions on that a little bit better. I don't know if you have any other examples, but those are some of the ones that I've used recently.
So certainly stress testing as well, particularly around climate change and some of those longer term events that you don't have data for. The ability to model some of those pieces is, when you don't have the hard data, but you can put the elements in, it's certainly been very, very useful. So
Interesting, the control testing, no longer sampling, but using tech to like full landscape. Seems like a huge value add. It's just, how do you have the bandwidth to do it without tech? Very interesting.
it's very good at creating data where you don't have data, but then you also have to read that data, understanding what you're reading as well, and make sure that it's actually a legitimate scenario, so to speak. Although whether we all thought we'd have a pandemic COVID-style scenario is another question. So, I mean, there's always that lens of any kind of results or data that you do use, whether it's historical or peer data. There's a lot of peer data that you can buy as well. You certainly always want to put that lens on there as well. Was there a question for this side?
I had a question, but I was interested in your comment about utilizing. Oh, okay. I can project. But all right, I was interested about your comment about utilizing AI to combat bad actor AI. I mean, it obviously it goes back to like the cybersecurity arms race between bad actors and good actors, but it seemed like the bad actors got a big leg up and outpacing all of us on the defensive side when nation states started getting involved and throwing their resources into. Do you see, my concern is there going to be an exponential effect of when nation states, we already know nation states are bad actor nation states are investing tons of money into AI. What is your opinion and outlook on how to be prepared for that, should that come to fruition?
Yeah, great question. And I think you could have projected too without that. So I'm right there with you. I think what would concern me the most is the future of call centers, call center applications when it comes to AI. I think that in the next few years I think there's things happening in the background there that we are not prepared for when it comes to AI voice, spoofing, and I don't think the likeness detection software is quite there yet. I think, when you use AI and anomaly detection, like for Telesign specifically, right? Like when we look at the behavior of the transaction, almost as granular as the behavior of the cell phone that the person is acting on. And I think what we see with us and the Sardines of the world, the Alloys of the world, is that putting together a unique risk orchestration of a multi-layer approach will allow you to really figure out, where their challenge is. And it's usually, at least what we're seeing is in device compromise. So I think where we're really strong, total, is we're able to figure out whether it's IP-related issues, whether it's device-related anomalies, or that device is a burner device, right? I don't think those bad actors are going to be able to outsmart that. You still need to have a device to commit fraud But I think on the inverse, that's where I think that on the call center end of things, right, that evaluation is going to be more difficult when you're actually face to face or phone to phone with somebody, and that's what worries me. But I do think that there is a lot of device statistics and likeness detection on the digital side that can help snuff that out. And then again, I think Gladys, the different points of friction, right? So if you do start seeing things on a digital side, I mean, I know there's some workflows I have to log into some systems where I have like 3 OTPs, I almost have to, put my phone in a box and not touch it again. And I think you can also combat it with just mass friction. But I do think there's enough detection there. When AI is already rolling, there's something in the background and a combination of the right companies. I don't think there's any silver bullets. I do think it takes a village. And we see a lot of these early adopting banks and more progressive banks using that layered approach. And then as a last resort, just adding in an immense amount of friction to stop the AI from spreading.
Are there any other audience questions? No? I think this last question that we have here kind of plays into that, Chris, but you may want to add, will generative AI help to streamline the risk management process?
Yeah, definitely. I think just awareness and understanding. I love the banks that are always testing and evolving. But yeah, I think AI, I mean, every conversation that everybody in this room is sitting in has some sort of semblance of AI attached to it. I think it's going to differ from bank to bank of how that effect is really played. I think it goes on to what Gladys was saying, is having that people in that process mindset, to use it to fill your mission, not to use it to change your mission. And yeah, I think it will have a profound impact. I'm excited. It'll be fun to see more evolution.
Yeah, I don't think it's going away. So AI is definitely going to be advancing. You watch some, like, I used to think about AI, I used to think about, like, what was it, like the Will Smith movie where he was like that human robot and he was going, and
Men in Black.
no, he was like iRobot. Yeah, there you go. It's like, that's what I think about. And I'm like, I hope we don't get there. Because it's like some aspects of it's scary, right? Like, you have to provide more information in order to protect the information. So one of the things really is like, like individually, the most protected thing they say is possibly like biometrics, like your fingerprints, your eye, right? Which is why they're starting to do that stuff with Clear and so on. Fingerprint before you can get into an office if you want to truly be secure. But now all of our fingerprints and our eye, like our DNA, when you do the 23andMe, like it's all out there. And so at which point do you, like what truly is that sort of like secure thing? And so I think that's really like getting to a point where we understand what AI can do, where potentially we may, like, can or may be able to limit it if there is such a thing, and then how much can you actually protect? Or do we just all accept the fact that everything about us is just going to be out there?
All right.
One more question. Did you have a question?
Thank you. Helpful conversation. When it comes to thematic risk analysis, have you guys seen companies use AI to conduct it based on known issues and anything that they may not be aware of using thematic risk and AI?
Yes. So when we're trying to do when we look across the organization, we do try on an annual basis at least to pull together all the thematic risks. So we utilize known issues, business race issues, audit issues, regulatory issues, et cetera. But in addition to that, we try to then also go out and look at industry-wide known concerns and kind of bring it back to see whether or not there's other things. And where we can, we try to look at patterns. Because the problem is the way our database is, like I said, the data is set up. It might be tagged to XYZ risk, but maybe there's a nuance component of it. So some of it right now is manual in nature. So even after you use the data analytics or AI or like innovation to determine what your themes are, you still kind of have to go over the top and look at it and really put the, sort of like that more human side into it, because it's still, it's like, at least the way we're generating right now, it's not sophisticated enough to really provide that level of detail, and it does throw up false positives, unfortunately.
Thank you. And final question, was it up there? No, we'll wrap after this. So.
A lot of these risks seem to be front end, but when I look out at the financial institutions, things that are taking them down are not phishing attacks. It's the fact that they've invested in commercial real estate in the Bay Area, or crypto or something like that.
Liquidity.
I mean, there's some really existential risks for a lot of these financial institutions that I'm not. So how are you addressing some of this? I mean, essentially, as a financial institution, you essentially are a portfolio of borrowers or investments, and your money is out there, sitting there, whether virtual or not, in other places. So how are the risks for those things being managed? Because those are the things that will actually impact not your reputation, but your existence.
So like I mentioned, like from a financial risk side, the two main ones that people tend to focus on that brings the banks down are credit and liquidity, right? So when we talk about runs on the bank, technology has made it much easier, because you made me think about it. When the credit crisis came and people were trying to remove their money, you had to physically stand on line at your branch. Now with SVB, when it went down, people just went on their cell phones and like everything just kind of moved, right? So it made it much easier. So you do need to think about some of these other aspects of like the correlation risk, the technology, et cetera, other areas of idiosyncratic risk that you might not think about. And we have also seen things where it wasn't necessarily obvious. So thinking about like, what are some of your tail risks? So it was like, if like these 6 things happen and the moon and the sun are aligned, we could lose this. And I think the technology has helped in being able to pull historical data, to be able to model sort of future state and I think that's a big ask for the Fed, right? So they put together these wild scenarios of like if X and Y and Z happen, and like when we're talking in the risk committee, they're like, those 3 things can't possibly happen together. Right, and so it's like, but you have to somehow model them to say, okay, if those things did happen, what would your portfolio, what would your exposure be like? And some of those things are becoming slightly easier because of the fact that you have some of these advanced technology and modeling techniques now. So I think that's where I'm seeing.
And I think as an organisation, you have to know who you are and what your risk appetite is, and certainly the risk on a commercial real estate portfolio is very different to the risk on a highly liquid US Treasuries portfolio or those sorts of things. So it's really understanding who you are and your risk appetite and where you're willing to be on that scale, because it's a very big scale in terms of liquidity. So with that, we will wrap this with a quick question to each of my panelists. So at the end of the day, it really comes down to the people. So you can have all the policies and procedures you want for a robust and agile risk management, but it's the people at the end of the day who have to follow it. So I'll go to Chris first. How can firms promote a risk-aware culture through their organisations?
I think, at least speaking more on the front end, because that's where I sit, we had, as an organization, invested in having some ethical hackers and some subject matter experts that aren't just internal people talking to you about adoption, right? I think that is a big eye opener, is that continuous education, that using third-party resources to educate and to continue to be vigilant. And I think it starts with educating your people, and I think it starts with and then having some pretty awesome processes to follow.
The real life examples, that's a great one. Gladys?
So I don't remember who said it, but there's a comment out there that says culture eats strategy for breakfast, right? So the best laid strategies don't actually work if your people aren't buying into it, right? So it really is communication, I think, tone from the top, leading by example. If everyone in the audience and other senior leadership truly believe and buy into risk excellence, risk culture, and the strength of your risk management framework, then it will trickle down and then you'll have strength. If not, it becomes much more difficult. And I think that's one of the things that we're really finding just in an organization that I've been in.
Strong values throughout the organisation. With that, thank you to Gladys and Chris very much for this entertaining conversation, and to you all for coming today.